we are seeing a lot of people that had crypto transactions, sales, and sometimes losses that weren't reported, but the IRS is now reaching out to them saying that they have gains. And why is this happening? So when you sell stock or when you sell cryptocurrency and it's reported through a brokerage, what happens is the IRS only sees what you sold it for. They don't usually see what you bought it for. So the IRS assumes you bought it for nothing and sold it for whatever price you did. So the IRS will automatically assume you have a gain, and they'll send you a letter, many times a CP 2000, with a proposed adjustment of income. So how do you deal with that? You need to show the corrected cost basis, what you bought the stock or crypto for, file an amended return through the proper channels. If you don't, even if you don't owe the tax, the IRS will still charge you for that adjusted gain that they think you owe. So I spoke to a financial professional the other day. He has his security license with the SEC, and he owed the IRS over $100,000. And the issue was the IRS wanted to file a lien against him. That lien then needs to be reported on his license and to his employer. So for financial professionals, before you set up a payment plan, you should be aware that a lien can hurt your employment, and there's a way to be proactive with the IRS to try to get that lien not issued. If a lien is already issued, you can then apply for lien subordination or lien removal, but it's a difficult process, and you really need to be proactive with it because it could affect your ability to be employed. Divorce and taxes. I see this probably once a month where someone comes to us, they got divorced, and in their divorce decree, the other party was supposed to pay the past due taxes. And they're like, why am I still getting letters? My, ex is supposed to pay the taxes. The IRS does not care about your divorce. They're going to go after both of you regardless. So you need to deal with any notices you received. Otherwise, they'll levy your account or garnish your paychecks. Once you deal with your liability, you can then go after your ex, your former partner, for any of the money that you paid that they should have paid to the IRS. But the IRS is going to say that's between the two of you, and they're not going to care. Foreign bank disclosures is another area that we see a lot of people get into trouble with. So it's very common in America. We have a lot of people from other countries, so they have family from other countries, and you may need to, if you have a bank account with $10,000 or more, that needs to be reported to the IRS. The income on that account needs to be reported. Certain foreign assets, depending on how much they're worth, need to be reported. If you get foreign gifts, they need to be reported. If you have ownership stake in a foreign corporation or foreign partnership, that may need to be reported. So the IRS loves to go after these cases because, again, even if you're just a regular person, you're unaware of the rules, they think that you're hiding something, you're purposely not trying to pay taxes, but the penalties are really significant. They can be in the tens, sometimes hundreds of thousands of dollars. And also the IRS can make this a criminal case if they think you're doing this purposely to hide assets. So if you have any foreign bank accounts, any foreign assets, make sure you are fully aware of what needs to be reported and how and when.